Welcome to this market analysis video from Hollow Point Trading. Today we're discussing why the market leaders have cracked, covering key events like the Fed meeting, the BOJ hike, and the latest on oil. Remember, dull entries miss the mark. Let's dive in. There are 5 major things moving the market right now. Semiconductor stocks are showing warning signs as they lead the tape lower. We also have the Fed decision, a historic BOJ rate hike, and potential developments regarding Iran oil sanctions. Our first major headline concerns SpaceX. We'll be looking at their recent market performance, the implications of their share float, and the current trading setup. SpaceX is seeing significant growth, with a valuation now hitting $2.6 trillion, making it the 6th largest company globally. While it has surged over 50% since its IPO, the float is the real story here. We advise trading the levels, not just the headlines. The core issue with SpaceX is its float. Approximately 95% of shares are still locked with insiders. This thin float creates significant liquidity risk, which is a crucial factor to consider before chasing any further price action. SpaceX recently announced a $60 billion acquisition of the AI tool Cursor. They accomplished this using their stock, showcasing the power of a vertical chart with a limited float. It illustrates exactly why understanding their lockup schedule is vital for traders. While the full lockup expiry isn't until December 2026, there are smaller, staggered tranches of shares unlocking before then. Each of these events represents a potential supply shock, so keep these dates marked on your calendar. Regarding SpaceX levels, the 195 to 200 zone is a key double-bottom support level that bulls need to hold. If that cracks, 176.50 becomes the next point of interest. On the upside, a breakout above 225 would signal a move toward new highs. In global news, the Bank of Japan has hiked rates to 1%, their highest level since 1995. After decades of zero or negative rates, this shift is a major development with deep implications for the yen. A stronger yen puts pressure on the carry trade, where investors borrow cheaply in yen to fund global assets. We saw the dangers of an unwind in 2024. Keep a close watch on the yen. It remains a quiet but powerful driver of global liquidity. Next, we turn our attention to the Federal Reserve. We are looking ahead to Walsh's first meeting as chair, which is a pivotal moment for market expectations. For the FOMC meeting, the rate decision arrives at 2 p.m. Eastern Time, with a 98.4% expectation of a hold. However, the real volatility is expected at 2:30 p.m. Eastern Time during Walsh's first press conference. Since the rate decision is largely priced in, focus on the press conference. Historically, markets can be sensitive following a new chair's first meeting. Our advice? Trade the presser, not the initial print. Don't pre-commit to a specific direction. The April 2026 FOMC meeting was slow on the day, but it was followed by a massive rally. The immediate reaction to these events can vary, so wait for the tape to guide your moves. Market returns on FOMC days are generally mixed, but when they are negative, the impact can be significant, as seen in early and late 2024. Proceed with caution and stay disciplined as we head into this meeting. Moving to the Fed, we look at the typical path. The market often drifts higher into the event, then sells off with volatility once the statement hits. Don't get lulled by pre-event calm. Decide your stance before 2 p.m. Historical data suggests unquote, new chair hangover. Statistics show that performance remains challenging in the months following a transition, with average returns lingering in negative territory. Next, let's look at Iran and oil. This is a classic example of headline risk that can flip the market's direction in an instant. Reports suggest a potential U.S.-Iran oil deal involving the waiver of sanctions on banking and transport. If oil supply returns to the market, it could have significant ripple effects on energy stocks like XLE. However, the deal faces a major sticking point: Israel. Tensions over Lebanon and regional security mean that even if an agreement is signed on paper, any independent action could cause the whole situation to unravel. You must watch the headlines closely here. Geopolitical developments combined with a new Fed chair creates a lot of fuel for volatility. A single update can reprice the market instantly. Now let's map out the SPY levels as we head into this volatile stretch. The all-time high is currently sitting at 760.40. We are just over 1% away from those levels. While the outlook is bullish, the path forward is a gauntlet of Fed, yen, and geopolitical events. On the upside, watch 755.50 to 756.50 as the first area of resistance. Clearing this shelf opens the door to test that 760.40 high. The pivotal support zone is 748 to 750. This has acted as a key hinge point in recent sessions. If it holds, the current dip is just noise, but losing it opens up the downside. If 748 fails, we look toward the gap at 740.25, with further support targets at 737.50 and 733.50. Given the current macro environment, these moves are entirely possible. Finally, we need to discuss the warning signal coming from the semiconductor sector. The leaders of this market bull run are now leading the tape lower. When the generals, like the semiconductor names, start getting sold, it's a significant momentum shift. Notable names are showing weakness. Broadcom is being sold, AMD dropped over 7%, while Micron and Nvidia are also feeling pressure. This rotation away from the strongest group is a classic warning sign. Until semis stabilize, proceed with caution and size your positions appropriately, as the burden of proof is now on the bulls. Let's move on to the setups. This section focuses on where the action is happening in the current market environment. First, we are watching the memory chip sector, specifically the DRAM ETF. These were among the strongest stocks in the market, but momentum has flipped today. Given their influence, they have the power to drag the broader tape, so proceed with caution. Next is AMD. After failing to reclaim the 545 level, the stock closed down over 7%. All eyes are on the $500 support level. Losing it would make short-term put positions significantly more interesting. Nvidia is also on our watch list. It's struggling to fill a gap and is currently pinned near its recent low at $200. With AMD and Nvidia both testing major support simultaneously, the warning for the semiconductor sector is intensifying. For an upside opportunity, we are looking at HIMS. Trading over 50% off its January highs, the stock is showing signs of rotating back into favor. We are watching the 32 to 32.50 shelf closely as it attempts to break a short-term downtrend. Take-Two Interactive is another upside setup. With the GTA launch catalyst in November, the stock is breaking its downtrend. We are watching the 245 level. However, keep in mind the buy the rumor, sell the news risk associated with its release date. Here are some additional momentum levels. Watch Dash for a break above 172.65, SMR for a move below 9.80, and MNTS for continuation if it drops under 9.24. These are volatile names, so prioritize risk management. Now, we examine a significant trade from the smart money, a $1.8 million bet placed on the energy sector. Someone has opened a massive $1.8 million position in XLE August 58 strike calls. This is a bet that the energy ETF will bounce. It likely hinges on either oil prices reversing or the potential for an Iran deal to encounter hurdles. For the XLE range, we are watching support at 53 to 53.50, which has held multiple times. The first target is the 58 strike price, with overhead resistance at 61.50 to 63.50. Be aware, if 53.25 breaks, the thesis weakens. Ultimately, this trade is a classic catalyst play. Smart money is paying up for the tail risk that geopolitical headlines disrupt current oil supply expectations. It's a reminder that today's market moves are often driven by these singular events. To wrap up, let's look at the game plan, outlining our bull case, bear case, and core watch list. Our bull case requires SPY to clear 756 and reclaim new highs, supported by semiconductor stabilization. Conversely, the bear case triggers if SPY breaks 748, potentially leading to a gap fill towards 733.50, exacerbated by semiconductor weakness. On our final watch list, we are tracking key levels for SPY, semis, SpaceX, and XLE. Whether looking at upside rotations in names like HIMS or downside momentum shifts in DRAM, remember to trade the specific levels, not just the market direction. Thanks for watching. Remember to respect the leaders and always trade the reaction. If you found this analysis helpful, subscribe and hit the notification bell to get our levels before the rest of the market. See you next time.